Priyanshu, living in Surat, recently got a job. He's young, but he's thinking long term even now. Long term as in comfortable life after retirement. Now, if Priyanshu is thinking long term, then he needs to arrange funds from somewhere. So he believes mutual funds will be an appropriate option. But in what kind of mutual funds should he invest? There are so many funds, so many categories. He also knows that one mistake in this journey can erode years of progress. There is a fast growth in equity fund, but the risk is also higher. Priyanshu is confused. He has even got his first salary. After research and filter, Priyanshu comes across Dynamic Asset Allocation Fund. This sounds good to him. So what is this Dynamic Asset Allocation Fund? Priyanshu decides to dig deep into this. Then he discovered that they are also called Balanced Advantage Funds. These are the kinds of hybrid mutual funds which invest in both equity as well as debt. But is this fund good for Priyanshu? From one point of view, DAF is fit for Priyanshu as it is less risky. The next thing which comes to Priyanshu's mind is where does this fund invest? On further research, he finds that they invest 65% to 100% in equity and 0% to 35% in debt. Priyanshu liked this mix. Next question is, what is the strategy of fund manager? First, the fund has investment target. The fund manager changes the investment in debt and equity on the basis of his market research and analysis. Which means, if valuation is low, more will be invested in shares. But if the valuation is high, then investment in equity will be cut. This is the strategy of these funds. So how come they are less risky? This is the most important question for Priyanshu. So, what happens is funds save you from risk by its dynamic allocation. Its benefit is you can expect to get higher return along with low risk. Ventura Securities Director Juzair Gabajiwala says that Dynamic Asset Allocation Fund is more beneficial for conservative investors. Dynamic allocation in this helps in reducing the risk as much as possible. During a downfall in share market, funds like these witness a lesser fall as compared to pure equity funds. Because they also invest in debt and then even take advantage of arbitrage. So along with the increase in your capital, these funds also try to save the capital erosion of investors. To understand how Dynamic Allocation Fund works, watch Formula Guru. Money9 suggests, if you want to invest in Dynamic Asset Allocation Fund, then invest for at least 3 years. This way, you will be able to sail through the ups and downs of the market, and after some time, you will get good returns. This fund invests in equity, so it is also good for such investors who take low to medium level of risk.